Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program, happy to have him on more and more often now, Anthony Milewski. He's a managing director at Pala, and he's also the head of Cobalt 27. Anthony, thanks for coming back on the program.
Colin, thanks for having me. I always enjoy catching up and talking.
Yeah, I wish we had you down at the conference last week on Jekyll Island. A lot of people were missing you there, but we had Mike Beck there, and he did a big discussion on battery metals that was well received.
Yeah, no, look, I heard a lot of great things about the conference, and it's a shame I had a prior engagement, but I'll definitely be there next time you hold it. I heard it was outstanding.
I wanted to, well, actually, you messaged me and said it would be a good time to do a follow-up interview because of what's happening next week. A lot of investors, equity investors, don't realize it, but it's LME week next week. And as you've described, it oftentimes sets the tone for how the equities perform the following week and also sets the tone for the metals for the year ahead. So I wanted to start off by asking you, Anthony, what is LME week? What does it actually look like on the ground?
Yeah, no, look, thanks a lot. So LME Week is held annual, and really, it's funny enough, it's a dinner on a Tuesday night hosted by the LME, and it's not a normal conference as such, but instead what you have is really a meeting of all the producers and consumers globally for base metals in London next week, and people start to arrive on Sunday and stay through Thursday, and it's really a time when producers and consumers come together and they, in many cases, put into place contracts for the next 12 months for specific base metals. It also sets the tone for the year around, kind of new demand and interesting demand stories. I'll give you an example. Last year, Cobalt was the big news out of LME Week, and we really saw a huge shift in the the tone and the attention given to that metal, and it's still going on the back of last year's LME Week. And I think this year, you're going to see some noise around nickel. So it's a very important week for the base metals and sets the tone not only for the actual commodity, but also for equities that have exposure to those base metals.
At LME Week, Anthony, are contracts actually being signed or things being done that are dictating the prices, or is this more so a meeting of the minds between the consumers and the producers to talk about what trends they see unfolding?
I think it's a little of both. I wouldn't say per se that they're actually being signed in London this week, but certainly, you are having deals being done that will result in contracts. And you really are having an understanding of where we sit in the supply-demand balance. And certain years you see guys negotiating discounts, other years premiums, and so it's a time when a producer or a consumer can come and sit down and see everyone else in the world that they want to see in one place. You also have all the trading houses here who, in many cases, are acting as marketing agents for these materials. So it's an important time for all parties, and I would say there's a bit of everything going on. So on the one hand, you do definitely have contracts and offtakes being arranged. You also have kind of executives from different companies coming together, and consumers coming together and just kind of discussing where the direction of the industry is and what the sentiment is around the particular metals that they produce.
You mentioned nickel is a metal that you have your eye on for this upcoming week at LME Week and the implications that it might have on that market. We've discussed this before, and this was a topic at the conference, but why nickel right now?
So I think, it's a funny week. You can also have a bunch of hedge fund dinners, best idea dinners, and you really get a bunch of guys and gals around gossiping around what they think the next big trade's going to be. And, I think that the Cobalt trade, now people understand it. They understand the supply-demand dynamic in the market. I think copper is a very big liquid market where people also understand it just because of all the attention that's paid to copper. This year is going to be nickel's year, in my opinion. I think, as we've previously discussed, you already have a bifurcation of the nickel market with nickel sulfide deposits really being key for their product that goes into the battery chemical industry through and ultimately into the battery industry. And so I think what you're going to see is a realization that this market has bifurcated, and the specific types of nickel are very much in demand and in fact, going to go into deficit. And what you're probably going to see are producers, charging premiums for these specific products. And you're also going to have the market on a kind of a broader level really starting to think about and understand what the implications are for the broader nickel market if you have specific types of nickel going into deficit. So I suspect that this year's kind of bell of the ball is going to be nickel, and within nickel, a certain subset of nickel that actually feeds into the chemical kind of battery industry.
Anthony, correct me if I'm wrong, but nickel is currently trading around $5.25 a pound. And you're talking about this bifurcation that's starting to happen whereby certain types of nickel are used in batteries and, the rest of the nickel is used in more industrial use. Do you expect there to be a major price differential in what's going to be charged in the market?
I can't say that there will be next week, but definitely going forward that there's going to be in my view, a significant deficit in certain types of nickel. Nickel pig iron, NPI as it's called. I don't think that's particularly interesting. This is basically digging up dirt, and then in some cases they put coal over and burn it, and just to dry it out, it's very toxic. It's almost like mud for the environment. So I don't foresee that that is interesting going forward. But other types of nickel, in particular, as we discussed, the nickel that's going directly into that battery market. And even within that nickel, certain subsets of briquettes and certain types of specific products that can be used will definitely trade at a premium. In fact, some of them already are trading at a premium. But I see that in the coming year and years, a huge premium will open up over, say, nickel pig iron.
Excellent. Well, Anthony, while I have you on the line here, is there anything else, any other commodities that you're really focused on this year coming up on this meeting? We did discuss copper briefly at the beginning of the call.
Yeah, look, copper is definitely going to be impacted by the electric vehicle story. The question around copper is really when. So if you look at an electric vehicle, the single heaviest metal component, which is not necessarily how you look at it, is actually copper. In other words, there's more copper in an electric vehicle than, say, nickel or cobalt. It's going to take a while for the penetration ramp up to happen to really impact copper. But one thing about copper that I think people are just starting to think about is, okay, you have the impact of copper from electric vehicles. What happens to the grid? What does it mean for copper when the grid has to be changed and altered to really support the electric vehicle? And that's a story which is going to unfold over the next few years. I think copper has a really interesting few years ahead of it. I just think it might be a little bit early to join into that trade. Notwithstanding that point, I will say that of these markets, meaning the nickel, cobalt, and copper market, copper is by far the deepest and most liquid market. And what that means is certain hedge funds who have liquidity constraints may express an electric vehicle view by going long copper early as a way to just sort of get exposure to the beta. Because they're not able to invest in nickel or cobalt. And so you may actually have a copper move well ahead of the actual demand story coming into the market. And so that's something to think about, and I'd be looking for that this year as well, although I anticipate that nickel is really going to be the story of this year's LME week.
Yeah, well, finishing up, it's fascinating to see so much interest around the metals that are integral in the EV market and the battery metals. And I was talking to Mike back at the conference, and he made mention that what we see unfolding in these specific metals could be really unrivaled in terms of a bull market in the past 100 years. And that's an exciting place to be, and you're really in the forefront of it, so it's great to have you sharing all this information with the audience.
Yeah, no, thanks a lot for having me. I really appreciate it, and look forward to being on again.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be? It actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?